An introduction to decentralized finances, or DeFi, the traditional finance system. If we want to take a dive into DeFi, it is good to look at the traditional finance systems. Trading can only happen when two parties have an excess of goods that the other party needs, and originally the trading was made with goods and services. This is called bartering. As the economy grew, so did the need for an intermediary that represents a certain amount of value. Hence, currency was created. Suddenly, you did not need to have exactly what the other party wanted, but you could just pay them with the currency, and they could use that currency in any way they wanted and get the thing they want if someone else offered it. So, a win-win situation, right? Well, in ancient Egypt, the original money was a form of receipt, representing grain stored in temple granaries, and some sort of medium like ox-hide shaped ingots of copper were used, and the Chinese used the first alteration of coin somewhere around 770 BC. But the first official currency that we know of was created by Lydia's King Aleates in 620 BC. This allowed the country to increase its internal and external trade, becoming one of the richest empires in Asia Minor. With the need for credit and a lighter medium of exchange in pre-modern China, paper money was introduced, which is basically like an IOU from the issuer of the note. For this to be able to work, people had to put trust in these central authorities like governments or banks so that more paper money was not created, that there was value stored. With this trust and no way to oversee the whole system, central authorities had a lot more power so they could create more banknotes without the need to have it backed up by anything. With the abolishment of the gold standard in 1971, the dollar became backed only by the trust in the government, or in other words, it retains its value through government stability and that of the nation's economy. The computer and the internet allow data to be exchanged at a really fast pace from one part of the globe to the other. This allowed the creation of databases that tell us how much money someone has, and payments were transferred simply into transferring this data from one person's banking account to another. Payment cards, debit cards, credit cards, digital money all became available because of this. And while some regulations were set, still everything was controlled by a few central authorities and no way for the public to fully oversee the system. Starting with peer-to-peer. The first blockchain, Bitcoin, is a peer-to-peer electronic cash system, or in other words, it acts like a currency that is not controlled by a single entity. Since currency is part of the financial system, we would say that the first solution of blockchain was a DeFi solution. It is estimated that only a bit over 8% of the world's money exists as physical cash, banknotes, or coins, and around 92% of it is in digital form. So there is a great potential for a digital currency to thrive. More and more banking and financial services are being built on blockchain, which can be seen as a natural expansion upon the initial peer-to-peer currency concept. A lot of solutions that connect blockchain and the real world may lag behind, as there might be more government restrictions and issues, for example, the Oracle problem. And governments are usually slower to react, as it is a long process to establish all regulations, laws, and to convince other political parties to agree with certain approaches. While DeFi solutions might find some problems with government regulations, there's almost no way of stopping someone from releasing a new solution and deploying it on the network. Once it is deployed, there's no central authority to take it down. Onwards to DeFi. With cryptocurrency expanding, so are its solutions. Blockchain and decentralization allow anyone to participate. Therefore, decentralized finance, or DeFi, allows everyone to participate in financial systems. DeFi is bringing centralized solutions and creating dApps that provide the same function. Currently, one of the most popular DeFi solutions is borrowing and lending, with more than $1.2 billion locked in this sector on Ethereum alone. Compared to the whole DeFi space on Ethereum having $1.5 billion locked, this represents 78% of the whole space. Derivatives are in second place with around $194 million locked, which represents a little bit less than 13% of DeFi space on Ethereum. A derivative is a financial security with a value that is reliant upon or derived from underlying asset or group of assets. The most common underlying asset for derivatives are stocks, bonds, commodities, currencies, interest rates, and market indexes. Assets with the most famous one of Bitcoin, or WPTC, represents $70 million, less than 5% of decentralized, and decentralized exchanges representing $57 million, less than 4%, and payments with Lightning Network leading the way have $9.3 million locked, which is less than 1%. While there are also many other DeFi solutions or are currently being built at the moment, Ethereum is currently still the main provider of DeFi solutions, and a list of DeFi applications for Ethereum can be accessed here. Other blockchains are starting to represent more DeFi solutions as well, whether they are built on top of the blockchain similar to what Phantom or ICX is doing, or on a completely different blockchain like Third or Terra. These are only a few examples of how DeFi is being integrated, but the core of it is to decentralize financial services, allowing everyone to participate and lowering restrictions and fees by cutting out the middleman. The best way that DeFi operates is by combining all the different solutions and using them almost like Lego blocks, with one protocol being built on top of the other and just adding them together to provide the best possible returns on your investment. With more and more services being developed and the possibilities of combining DeFi on a cross-chain level, the whole investing in DeFi can be really confusing for new users. But there are many guides that can be used to get you up to speed on how to invest in DeFi. The DApps interacting with each other, simplification is also needed. Luckily, there are services in DeFi that can also help you simplify the processes, like IDLE and platforms, which you can interact with the most popular DeFi solutions on the market like InstantApp and Ethereum. At the time of writing, yield farming is a big upcoming thing for DeFi, which is connecting solutions to maximize your returns and also farm governance tokens of projects like Compound, Balancer, Ren, etc. The reported number of annual percentage yield APY were even up to 100%. This is an insane amount, but it's probably just starting push before more people understand and join. Then API will most likely stabilize at a much lower percentage. Please note though that DeFi is not risk-free. While it can yield great returns on your investment, there's also a possibility of smart contract bugs, liquidation risk, liquidity crunch, administration key or governance compromise, and ratio failure. While some of this risk cannot be removed, you can always ensure your investment from technical fails like smart contract bugs or stablecoin dollar ratio falling through insurance services like Nexus Mutual or Ethereum. The future of DeFi. The future is always impossible to predict, but the way things are resolving now, the future of DeFi seems bright. With the rapid increase of projects being connected to each other, with tokenizing more stuff, and consequently more funds being locked into the DeFi, this might just be the next gold rush in crypto space. In the long term, the goal of this space should be that anyone can invest in anything regardless of the amount that they contribute, as blockchain allows easy pooling to collect enough funds. You could look, for example, at investing in real estate market with $1. In traditional markets, this would be impossible, as it would not be worth the time for an intermediary. Also, the returns in a decentralized system can be higher because there's no middleman taking their cut of the profits. At the end of the day, what could be a better sector than finances for cryptocurrencies to dominate? After all, they are currencies, and the first use case for blockchain was a financial one. How will things play out in the blockchain space in the decentralized financial world? I guess we'll wait and see.